Some remarkable changes are happening right now to the US housing market. This is based on my own analysis of Realtor.com's latest data, one of my favorite videos I make each and every week for you guys. So let's go and dive right in. I have a lot to share. This is an article from Realtor.com posted on July 3rd. And of course, I did not even read it. Instead, go to realtor.com/research/data. And by the way, I provide links in my video description below. So if you guys actually read this analysis from them, please let me know if my analysis agrees to theirs. Anyways, if you go to this website, click on weekly inventory and then click on that link right there. It takes you more or less to this information. The year-over-year change of asking prices on a national level, inventory levels, new listings, as well as price reductions, and how fast or how slow houses are selling. And by the way, I hope you guys get a lot of value out of today's video. And of course, if you do, please hit the like button. Also, consider subscribing as well. I appreciate you guys so much. So this report covers the week ended June 29th. So asking prices increased by only 0.5% compared to 1 year ago. This has been a common trend for about 2 months now because asking prices have been relatively flat ever since February this year due to more houses being listed for sale and of course 7% mortgage rates as well, keeping home sales at relatively low levels. Also, stagnant growth of asking prices leads closed home prices in the coming months. So therefore, we should not expect rapid increases on a month-to-month basis regarding home prices, given the fact that asking prices are relatively flat from last year. On top of that, due to seasonality as well, because overall, the median sold price on a national level tends to decrease somewhat in the last half each and every year, especially during the winter months. All right, let's now talk about inventory growth because that increased by 38.1%. Approximately 38% more existing houses for sale compared to 12 months ago. In fact, that's the biggest year-over-year increase since April of 2023. Also, there's been more houses for sale this year compared to last year for 34 consecutive weeks. Ever since mid-November, we've had more inventory compared to the previous 12 months. This, of course, is good news for home buyers, but home buyers are still facing this double whammy, record high home prices, and of course, 7% mortgage rates as well. But the good news for home buyers is that when we have more houses for sale, that limits home price growth on a national level. Also, housing inventory has been rising due to two main reasons: more new listings compared to last year, but more importantly, in my personal opinion, we've been seeing a rise of inventory really due to a pullback in home sales. And again, this pullback in home sales is due to a lack of housing affordability, record high home prices, and of course, elevated rates as well. Now, speaking of housing inventory, as you guys all know, I like to share multiple sources of data. One of my favorite ones is actually from altosresearch.com. So 1 year ago, we had approximately 466,000 existing houses for sale. Now we have approximately 646,000. So approximately 179,000 more houses for sale compared to 12 months ago. That's an increase of 38% year over year, which has been paid at 38%, by the way, though, for about 4 weeks now. So we have been seeing the same rate of inventory growth this year compared to last year. Therefore, we're not seeing inventory skyrocket like we saw in 2022. The growth rate of inventory rising at the same pace last year for about a month. Here's also something that's different compared to last year as well. We've been seeing more houses for sale compared to the start this year. So there's approximately 147,000 more houses for sale compared to the start this year. That represents an increase of 29% year to date. Compare that to the same time frame last year, inventory decreased by 1%. In other words, supply was down from January through late June last year, whereas this year it's actually increasing. In addition, it's also rising faster compared to the average 2017, 18, and 19. So for example, it has increased by 18% from January through May this year, compared to a gain of only 9% looking at pre-COVID levels. This only goes through May. I should have June's numbers from Realtor.com next week. So I'll make an updated video regarding inventory because so far this year, we're seeing inventory rising at a much faster clip compared to 2017 through 2019. And of course, stay tuned, and I'll definitely keep you posted regarding that to see how June's numbers impact these trends. So to summarize, inventory is not only up by 38% year over year, but it's also rising faster than pre-COVID levels. However, though, the number of new listings is still less, far less than looking at pre-COVID. So the rise of inventory, in my opinion, is really due to a decrease in home sales, causing inventory to rise further as new listings still hit the market. Speaking of new listings, a measure of people listing their house for sale, that increased by 10.8% from 12 months ago. This is a different trend because last week when I made this video, I talked about how we had a increase of new listings, but the increase was actually losing momentum, as can be seen from the week ended June 22nd, going back to May 4th. We saw single-digit gains. Now we're up by over 10%. So this marks the first time since late April in which new listings increased by 10+%. Prior to that, the growth rate of new listings were losing momentum, rising by only single digits for about 2 months. And FYI, I expect a dip of new listings next week because that would encompass the 4th of July holiday week. We tend to see a decrease of activity during the holidays, of course, so don't be surprised to see that this number of new listings being in negative territory or down by single digits. And the reason why I mentioned that is that all these figures in today's video are not seasonally adjusted. All right, let's also talk about how fast or how slow houses are selling. Last week, it took 2 days longer to sell a house compared to the previous year. This is much different compared to October last year through March this year, when on average, houses were taking faster to sell compared to the previous year. Let's watch this closely though in the months ahead, because if inventory becomes more stale, this would lead to more price reductions. And also, if we continue to see double-digit gains of new listings and for home sales to decrease as well, that would cause inventory to rise further by more than 38%. All right, moving on, let's talk about the number of reduced price listings because that increased by 53.1% year over year. This marks the 23rd consecutive week in which we have been seeing more price reductions compared to the previous year. Speaking of that, let's have a look at the share of price reductions as well, because that share is at basically 38%. That is at least a 5-year high during the same time frame though, going back to mid-July of 2019. However, though, we still are well below the peak that was set back in 2022 at 43%. But the share of price reductions tends to peak in the winter months. So of course, it makes sense that the share of price drops was at relatively high levels back in November of 2022 compared to June this year. All right, if you guys are still watching today's video, I appreciate you. Let's kind of go over a summary of today's video and then some, kind of peek ahead. And also as well, some housing market trends we saw this week to kind of wrap up the week. Number one, the growth rate of asking prices on a national level has basically stalled out ever since February. This is likely due to a significant rise to housing supply, as well as elevated mortgage rates and record high home prices, causing sales to remain very low. Number two, housing inventory increased by 38% last week. That was the biggest year-over-year increase since April last year. This is mostly from a drop in home sales, but also due to a rise of new listings as well. However, there's still approximately 32% fewer houses for sale this week or this last week compared to the same time frame in 2019. And again, real estate is local, so the trends I'm sharing in today's video may not pertain to your state, your area, etc. So for example, as of May, the state of Texas as a whole has more houses for sale compared to May of 2019, up by about 2%. Also, Florida is down by 5%, Arizona down by 2%, and Idaho only down by 1%. So there's basically what, 4 states in which they have very close levels of inventory compared to pre-COVID levels. And again, I'll have an update for you guys regarding June's numbers once those are posted. So number three, about 78% of homeowners who do have a loan on their house have an interest rate below 5%. That's based on data from Freddie Mac through January this year. That has been limiting the amount of people listing their house for sale. But again, we have more new listings compared to last year for quite some time. But it still is limiting new listings because new listings are not skyrocketing like we had in 2008, for example. And thus, this is keeping inventory levels at relatively low levels, especially compared to 2018 and 19. New listings are higher than last year, and last week they rose by double digits for the first time since April. Number 4, the share of price reductions is at least a 5-year high during the same time frame, and has also been rising faster than 2023. However, though, the share of price reductions is not increasing as fast as 2022. Number 5, last week, houses on average took about 2 days longer to sell from 12 months ago. But this is a lag indicator of our U.S. housing market. But wait, there's more. Number 1, average 30-year fixed rates are still below the peak back in October last year when the average 30-year fixed rate was at 8%. Now we have rates around 7%, but on top of that, we have record high home prices. A double whammy for home buyers right now. Number 2, the most recent stats we have showing application numbers to buy houses using loans that decreased by 12% year over year from the MBA for the week ended June 28th. Also, the National Association of Realtors reported that pending home sales of existing houses, excluding brand new houses, in May fell by 7% year over year, and also fell to a new record low excluding the onset of COVID. So basically the measure of pending home sales is at a 23-year low on a national level. In addition, new home sales also tanked as well. This is a measure of signed contracts being signed between a home builder and a home buyer. That decreased a whopping 17% this May compared to May of 2023. Therefore, builders offering all these incentives is not helping drive home sales, at least on a national level. The drop in sales for new houses is especially staggering, given the fact there's more new construction houses for sale this May than any other month since February of 2008. Number 3, looking forward for the nation as a whole, asking prices have been relatively flat. Inventory has been building slowly but steadily. Houses are taking longer to sell, and we're seeing a rise of price reductions. All these metrics are pointing to a softening housing market, but it could look a lot worse, right? All these metrics are really pointing to that we're going to see a lack of home sales. We have record high home prices, elevated rates, which is keeping home sales at relatively low levels, which is helping increase inventory. But again, we're not seeing new listings basically skyrocketing or inventory skyrocketing as well. Kind of imagine a scenario, looking at these numbers right here. Imagine a scenario if new listings were increasing by 20, 30, 40%. That would cause inventory to absolutely skyrocket as well, putting downward pressure on home prices. But we still have more listings compared to last year for quite some time. But again, we're not seeing a surge of new listings, at least as of yet. And like I mentioned right there, we need more data, and of course, a lot could change as well. We have areas in the Northeast in which inventory is basically plummeting, whereas other areas in Florida and also in Denver, Idaho, parts of Texas, we have more houses for sale compared to 2019. Number 4, the most important one. I appreciate you guys so much. Please like and subscribe. Also share any of my videos you guys want on your social media. I appreciate that so much. Have an awesome day. I look forward to seeing you on the next video.